Hello friend, welcome to my YouTube channel. I hope you all well. So I hope you like my videos. So guys, today I am discuss about 5 option tradings strategies for beginners. What is beginners trading strategies? So guys, options are among the most popular which call of trade for trades because their price can move fast, making our losing a lot of money quickly. Option strategies can rank for quite simple to very complex with a variety of PIFOPs and sometime odd names. Iron Condor anyone. Regardless of their complexity, all option strategies are based on the two basic type of option, the call and the put. Below the 5 popular strategies, a breakdown of their reward and risks and when a trade might leverage them for next investment. Well, these strategies are freely guide on the base of call option and put option before we get started. So guys, now option 1, long call. In this strategies, add trade by a call referred to as going long a call and expect the stock price to exit strike price by expiration. The upside on this trade is uncapped and trade can learn money many times their initial investment if the stock soars. For example, stock X is trading for $20 per share and a call with a strike price of $20 expiration in 4 months of the trading at $1 to contact cost us $100 on the contest $100 100 shares requested per contact. So guys, option number 2, covered a call. A covered call involves selling a call option going short but with the visit there the trade sales a call but also buy the stock underlying the option 100 shares for each call sold. Owning the stock turn off potential risky trade. So guys, Option number 3, long put. In this strategy, the trade by a put referred to as going long a put and expect the stock price to be below the strike price by expiration. The upside on this trade can be many multiples of the internal investment if the stock fails significantly. So guys, now option number 4, short put. This strategy is the flip side for the long put, but their trade sells a put referred to as going short a put and expect the stock price to be above the strike price by expiration. In exchange for selling a put, the trade service a cash premium with which is the most a short put can earn. Now 5, merit put. This strategy is like the long put with the visit. The trade owns the underlying stock and also buy a put. This is a hedge trade in which the trade expect the stock to risk to rise but wants increases ensures in the invest that stock files. If the stock does all the long put offside, this decline. So guys, how much money do you need to trade option? If you looking trade option, the good news is that in often does not take a lot of money to get started. As in these examples, you could buy a low cost option and make money. Time your money, however, is very easily to lose your money while swinging for this fence. If you looking at a strategies started, you could start trading option with just a few $100. However, if you make a wrong bit, you could lose your whole investment in week a month. A suffer strategy to become a long-term buy and hold investor and grow your wealth over time. So guys, thanks for watching my YouTube video. I hope you like my videos. I request you please subscribe my YouTube channel and press the bell icon and follow me more videos. Okay, God bless you.